Hey guys, hope you are all having a fantastic Wednesday. Today we have a couple of things to go over, in particular taking aim at China and the ever-developing Evergrande situation. Some pretty wild stuff has been happening that I think you need to know. We also have some pretty cool stuff regarding Loopring. Though we are a bit loaded in content, I am going to Tokyo drift through it all. Also, if you missed it, I made a morning video discussing some pretty important stuff. I will link the video in the comments below in case you missed it. Before we begin, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. First, Evergrande chairman Xu Jiayan has reportedly sold more than $1.1 billion worth of personal assets to prop up his embattled company. Some of the houses he had in Hong Kong, Guangzhou and Shenzhen, as well as some private airplanes, have been sold according to the state-owned China Business News. The cash that was derived from these sales has been pumped into Evergrande to help it handle its liquidity problem, being used to maintain the basic operations of the empire. Staff salaries, interest payments on bonds and cash owed to investors has been some of the things where this cash has been allocated. Evergrande continues to try to shed as many assets as possible. But it wasn't just Chairman Xu who has been selling his own personal assets. Evergrande boss Wei Ka-yan has reportedly been selling some of his personal assets too, including homes, jets and even a calligraphy collection to help make debt payments for his ailing property firm. I find all this interesting, because not too long ago, it was reported that Chinese officials had quote-unquote recommended these people to sell their own wealth to save the company. Now all of a sudden, these people are selling everything they can frantically. There is no such these as coincidences when it comes to this. China is indeed working behind the scenes managing the situation and forcing these clowns to sell everything they have, probably with threats of incarceration or something much worse. The current predicament China finds itself in may be much worse to their economy than the pandemic ever was, believe it or not. Numbers and data estimates show that China's domestic product is on pace to expand 5%, which is in line with the previously disappointing 4.9% pace of the previous 3 months, which were well below the 6 to 7% recorded before the onset of the pandemic. As you can see, the slump is the effect of a struggling economy as it tries to find a way to return to normal. However, the current situation with Evergrande and their over real estate market, which accounts for 25% of China's gross domestic product, has every economist worried. Add to the problem the energy shortages and recurring outbreaks of the pandemic and you will see that growth is stunted for the short-term foreseeable future. China's growth has taken multiple low hits, and with the United States also grappling with a 5 million shortfall in jobs alongside the highest inflation levels we have been in for 30 years, expectations for the future are conservative at best and full-out market crash levels at worst. Forecast data suggest the consensus for China's fourth quarter is currently 3.5%. For the record, China is set to expand to 8% for the year. According to some advanced economists, the impact of China's slowdown has yet to be truly felt. With this in mind, the nowcast shows the United States on pace for a 4.6% annualized expansion for the fourth quarter. Germany is currently clocking around a similar pace with Japan also in line. The world's biggest central banks have all been wrong about every prediction they have made, and this whole scenario has shown who has been humbled and who has been too arrogant to learn a lesson or two. Again, I don't blame officials for not making every perfect decision, since this type of inflation is quite unprecedented. What I do blame them for is for protecting Wall Street, which has made things much worse, and for so brazenly lying to us consistently throughout the whole process. I have no trust in any central banking institution in the United States. Moving on to more bullish news, Loopring CEO moved 61.3 million Loopring coins, again furthering speculation about a GameStop NFT. The move of 61.3 million LRC is most likely a move to support the forthcoming GameStop NFT marketplace. At this point, it is worth noting that GameStop stock's free float is worth about $500,000 more in Loopring coins. GameStop announced they have been hiring developers for an NFT platform back in October. Remember that the job openings required knowledge in NFT marketplaces, Ethereum and Ethereum Layer 2 solutions. This is amazing to see and I am absolutely jacked to the brim with these latest developments. Also, I would like to add some thoughts on the AMC NFT pleads that I keep being requested to address. Adam Aron has already been talking about NFTs, but a dividend NFT is something I don't think AMC is honestly ready to implement, in particular given some of the current circumstances the company finds itself in financially speaking. Though their future keeps on getting brighter and brighter, it is worth noting that, as Adam Aron said, the company is not out of the woods yet. The reason for why people are pushing hard for an AMC NFT is because, since Loopring is making so many rounds now, they want AMC to equate something of similar value. Both companies are in completely different places financially speaking, and I think that if Adam Aron could talk about the issue, he would say so. I have no doubt this has already been discussed by the board, especially given that he already said they have been looking into an AMC crypto coin. AMC's focus, based on their actions and what they have publicly said, is centered in broadening revenue sources to expand the business and grow. They are focused on the fundamentals of their business to make it add propositional value to investors, retail and institutional. I think their approach is currently the best, and that investors should be more cautious and patient with the process instead of trying to force AMC into changing their pace in order to push an NFT to cause a squeeze. Guys, GameStop already has everything in line. GameStop is more likely to set off the squeeze based on everything I have seen, which is a controversial opinion to have for some odd reason. If GameStop pops the squeeze, then every meme stock owner profits. Why focus on having AMC also develop an NFT when GameStop is already laying the foundation which will allow them to do it if they want? Not going to lie, and I will sound controversial, but a lot of this push to me comes from as a bit desperate to sort of compete with GameStop. The AMC community tends to be more easygoing and wholesome overall, whereas GameStop's investing community tends to be more tribal and hardcore to the end of the world. I think with the latest developments coming from GameStop and Loopring, many AMC holders feel the urge to have their company stock compete to have a leg up on the squeeze. Again, if GameStop ushers in the squeeze, everyone meme stock owner will get their payout. Right now, I think AMC is doing just fine, and they should keep doing what they are doing. Let AMC grow. Let them expand to find new profitable revenue streams that will allow their business to continue growing post-squeeze, and let them consolidate that debt. AMC has a ton of debt that they need to address, so let them take care of those things and align everything before trying to force their board into putting an NFT solely to compete with GameStop and potentially force a squeeze. AMC is doing just fine right now. I know many will disagree, so be respectful in the comments. It's okay to hold different opinions. Now, let's talk about today. The Fed submitted over $1.520 billion in reverse repo operations today, the second highest reverse repo in recorded history. Dark pool trades for AMC accounted for 64% of the total volume today, while dark pool trades for GameStop accounted for 41% of the total volume today. AMC had a larger amount of sell orders than its buy orders, with GameStop presumably also having a larger amount of sell orders than buy orders. Now, let's talk about performance. AMC traded bearishly, losing over 1% for the day. The stock traded quite bearishly during the pre-market, initially breaking the VWAP and being unable to consistently trade above it. Upon market opening, AMC had a pretty big run, going from $42.10 to $44. After that quick initial run, the stock started getting attacked, with the VWAP support being tested many times until it was broken. The stock would fall and find some support at $42.40. After forming an ascending triangle, shorters hit AMC with a short attack that took it down for the remainder of the day. AMC closed at $42.13, below the VWAP. As for tomorrow, AMC will have support at $41.25, $40.73 and $40.17. Resistance will be met at $42.25, $43 and $44. Clearly, shorters are trying to defeat momentum to try to get AMC to close below 40 on Friday. Anything under 40 is a must-buy. There was a ton of manipulation taking place during the day, so take it for what it is and buy the dip if you can. GameStop traded bullishly, gaining over 1%. GameStop opened to a run from 206 to 217, a huge surprise to everyone watching the charts. The stock seemed to have a ton of momentum because it seemed poised to want to retest that 217 to run over 220. Shorters, however, had other plans for us. After a forced consolidation at the VWAP around 213, GameStop was dipped back down to 211. It was kept there for a while until it started moving upwards to test the VWAP at 213 again. Shorters then hit the stock with a short attack, taking it down to 208.23. After a small bounce, GameStop closed at 210. As for tomorrow, GameStop will find support at 208, 206 and 203. Resistance will be met at 213, 215, 217. Though GameStop had a massive run, the fact that shorters were able to undo almost all of the progress really points out how important consolidation is. This is why I like it more when the stock moves upwards at a slow pace rather than the frantic runs. They can come down just as quickly if support walls are not built along the way up. That is all I have for you guys today. Let me know your thoughts down below in the comments. What do you think of my opinion for the dividend NFT for AMC, and let me know if you are liking the morning segments too. Thank you all for making it to the end of the video, you guys are all amazing. Remember to watch the morning video if you missed it. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day and to the moon.